Good morning, traders. Welcome back to today's Nifty Market Outlook. Let's break down the complete pre market setup, key support and resistance levels, and how global cues are shaping today's trading session. Stay with me till the end because we'll also discuss possible intraday zones, how you can plan your trade smartly for the day. Coming to global market overview, starting with the global picture, the tone across world markets is clearly bearish. The US started out by nearly 1%, indicating strong selling pressure in US equities overnight. Asian markets are also trading deep in the red, down around 1%, confirming risk of sentiment. Europe too isn't showing any signs of recovery, with indices down about 1%. On the currency side, USD INR is slightly at 0.06%, which means the rupee is a bit weaker but stable, not a major driver for now. Crude oil has jumped by 2%, but we'll ignore that for today as it's not directly impacting short-term Nifty momentum. So overall, global cues are very negative, which may push our domestic markets to open weak and possibly extend the downside during the first half of the session. Let's now shift focus to Nifty's technical setup. On the screen, you can see the resistance and support zones clearly marked. Our base zone is around 25,278, which is where Nifty is currently trading. Above that, we have the following resistance level like R1 at 25,343, R2 25,423, R3 at 25,518, R4 at 25,576, R5 at 25,634 and R6 at 25,692. Whereas coming to the key support levels, S1 is at 25,185, S2 at 25,095, S3 at 24,995, S4 at 24,915, S5 at 24,830 and S6 at 24,755. These levels will act as major turning points for intraday traders. Based on today's sentiment, the focus should remain more on support systems than resistance crossovers. Now, when we coming to sentiment and market bias, now when we combine the technical chart with global sentiment, the bias clearly points towards a negative to very negative move for today. There's a high probability that Nifty may touch the lower support zones, especially S1 at 25,185 and S2 near 25,095. If selling pressure sustains post-opening, the flat to negative pre-market tone also signals that traders are cautious. If the index fails to hold about 25,250, we might see quick short buildups and profit booking from yesterday's buyers. However, if Nifty shows early strength and weakens 25,343 R1 with volume and a short covering bounce can't be ruled out. So keep your eyes on how the first 15-minute candle behaves after market. So after opening, how to plan our day today, like intraday strategy. If Nifty opens below 25,250 and fails to recover, look for short opportunities toward S1 and S2. If it breaks below 25,095, we could even see 24,995 coming into play. That's nearly 300 points downside potential. Keep your stop loss tight about 25,343 for all short trades. For aggressive traders, any bounce towards R1 or R2 can be used as shorting opportunity if price rejects those zones. On the other side, if Nifty managed to sustain about 25,343, the market might turn range bound between R1 and R2, giving small intraday scalps on both sides. Remember, today's sentiment is weak, but intraday reversals are common, so protect your profits and trail your stop losses. Coming to the final outlook, like global markets are deep red, negative cues from US, Europe, and Asia. Nifty bias is negative to very negative. Key downside zones are like 25,185, 25,095, 24,995. Key upside hurdles are 25,343, 25,423. So expect pressure on IT and financial stocks, while FMCG might show some defensive strength. If the index holds about 25,250, we remain bearish for the session. If it recovers and sustains about 25,343, we might move into a consolidation phase. So that's the complete pre-market and technical breakdown for today's Nifty setup. If you found this analysis helpful, don't forget to like the video and share it with the fellow traders. Subscribe for daily updates. Thank you.